Hey, good afternoon, everyone. Chris here with Green Bar Trading, also known as Ghost of GBT on Reddit. Thanks once again for tuning in for a weekly charting and technical analysis video. We're going to get through a bunch of these today. I've got the list already made up, so let's just dive right in. Number one is going to be Tesla long. And I actually already looked at this, and I really like it. I'm not entirely sure I like the daily chart just because it's sort of at the top of its channel right now. You know, it's been in this sort of big downtrend for quite a while, and it's sort of right at the top of that channel. However, it's also starting to sort of coil up into like a wedge type of pattern, and this is a pretty bullish pattern overall. So if we look at like a weekly chart, we can see that it's trying to sort of bounce off of the 200-week moving average. And the other thing that I really like about it is the fact that the market is strong. So the S&P 500 is very strong. The Dow Jones is very strong. The Russell is very strong. The only one that's really lagging is NASDAQ. And NASDAQ is right at all-time highs. So it's not breaking out and ripping to new all-time highs like the other three, but it's still strong. You know what I mean? It's come back all the way from this pretty big sell-off and rotation out of tech stocks into some of the other names. And so Tesla is going to be affected by NASDAQ. So the other thing I like about it is this pattern here on the 30-minute chart. I have a nice, clean, tight sort of flag that's developing here right around 192 bucks. So I think if it comes over 192.50, maybe 193, you should at least get a pop up towards like 200. And then if it gets over 200 and can actually hold, then we're making a run for the 200-day moving average. And then, you know, we might actually reclaim, you know, a bigger sort of long-term move. But for right now, it looks pretty good. The only thing I would say is if you're going to trade it, just have maybe like a little bit of a longer-term outlook. You know, so maybe use like the 30-minute chart or something like that as opposed to using a 5-minute chart. It doesn't really seem like a quick day trade type of explosive move and it's done. It seems more like it's going to grind around a little bit and try to get up to 200. So overall, I like it. I would just watch for a break over 192.50, maybe 193, and keep your stop right underneath this bottom yellow line at 191. So there's Tesla. Next up was NVIDIA. This one has been consolidating since they released earnings last, and it's sort of at the top right now. It looks like it attempted 95. You know, it attempted this 95 break another time here and failed pretty miserably, actually. This has been getting some nasty sell-offs like during the middle of the day. So I'm not really sure what the reasoning behind that is, but you know, this is kind of bearish to me just because the volume on these pullbacks is so much stronger than on the runs upward. So it's not like it's not a long. I mean, the thing's been in this gigantic uptrend for the entire year, but it's just not super clean right now. So if anything, I would sort of watch this key level that it's been bouncing around, which was the earnings day high around $89. If you can pick it up near 89 bucks and maybe set your stop loss underneath these last two lows, then you might be onto something. And your goal obviously would be for it to break 95, maybe go for like $100. So not sure I like it right now, but it's definitely one to keep on the radar. NVIDIA. Next up, CLF. CLF in a nice strong uptrend. I believe this is a coal mining company, Cliffs Natural Resources. Let's check it out. Industrial metals and minerals. Iron ore. Okay. Okay, so it's an iron company. So it's not an oil company. Oil has been nice the last couple of weeks. This one, I don't know. I don't really see anything in it right now. I mean, it's just, yeah, it's at the bottom of its trend, I guess. But it's not, it doesn't look strong. You know what I mean? Like it's sort of selling off. Even though it's in an uptrend, it's kind of in sell-off mode. And I don't know, I'm not really a huge fan of this one for some reason. So I'm just going to leave it at that. I don't really like it. I wouldn't trade it. There's nothing really super wrong with it. It's just not a pattern that looks super bullish. It looks like it would be annoying to trade, I guess. So there's CLF. APH. So it looks like this was split back here in 2014. 100 for 100 to 50, so probably 2-to-1 split. And it has since come back. So this is technically making all-time highs right now. Looking at the 5-minute and the daily, this is just, there's no momentum in the stock right now. And I think that's maybe what I don't really like about CLF, is that there's nothing special about the volume. You know what I mean? On some of these things like Sempra, we had, this huge volume over here. So this momentum is going to hang around for a while. Same thing on Nugget. We've seen, this gigantic volume in the sell-off, and now it's just kind of sitting at these lows. MDCA, we've had this big run after a bad gap down here. So this momentum will hang around. And on these companies like CLF and APH, I just don't see any momentum. It's just kind of normal average volume. So if you want to get normal average returns, then sure, these are in strong uptrends. You can just go and trade them and hold them for a couple of months or whatever you want, and they'll most likely work, but it's not going to outsize the market returns. So I wouldn't touch this thing. It just doesn't really look like a long to me. It just looks like it's kind of at the top of its channel and it's in an uptrend and there's nothing special about it. Halo, and of course the infamous AMD. AMD off of our list a couple of weeks ago through that $9 mark was pretty awesome. And then also through the $10 mark. Halo, this is not bad. So this is what I was talking about with the momentum. You see this like big run here with lots and lots of excess volume, and now it's just been kind of consolidating. This lower volume over here is generally due to just profit takers who are taking profits after this big run. So I do like this. The only thing I don't like is that on Friday it closed red at its lows. So I would want to see it bounce and probably come back and test that $12 area a couple times. It'll probably be more obvious if we look at it on like a 60-minute. So it seems like maybe 12 is the key. If it can get over 12, then I think you might be onto something. Until it comes back over 12, then it's a non-trade for me. It's not really something that I would touch. But this $12 level is very significant. We can see it all the way back to here. So once it gets over 12 bucks, I think it's in good shape, but it needs to, it needs to do something other than gap up to 12 and then fade off all day and close at 11.50, because that's obviously not good. So that's what I would be watching for on Halo. Next up, AMD. So AMD, once again, this is what happens with this stock. We look at this thing like seriously every other week. And it's the same question every single week. The stock goes on a run, and then people ask, is it a good time to long? And I always say we have to wait for it to consolidate sideways for a few days or maybe even a couple of weeks. And so back here at 550, it went on a run up to 7. Everyone started asking, do we long it now? And I said, no, you've got to wait until it consolidates. And so it consolidated for a while, and then people buy it at $7, it breaks out, and everyone comes in and wants to long it again. And I said, you've got to wait until it consolidates. And so that process is going to repeat. We did the same thing over here when it went from $7 to $9. Everyone started asking, is now the right time to long AMD? And I said, no, wait for it to consolidate underneath 9 and then buy it through 9, potentially run up to 1050. And there you go. That's exactly what happened. So now we're through 1024, which was the last weekly high before, I think, like 1270s or something like that. Whoops. Uh, 1024. Yeah, so 1024 was right here back in 2010. And then we had a little pull over here with a low of 1127. But it seems like sort of this way back from like '07, that $12, $12.20 area is probably the next spot. So this is what's going to happen on these stocks. You're going to get a breakout up to resistance, 1025, 1050, and then they go sideways. Same thing happened at $9, same thing happened at $7, same thing happened at $6 and $5 and $4 and $3, and that's just what happens on these stocks. So that's what I'm watching for. I'm waiting for it to move sideways for a week or two and set up again under, say, 1050, 1075, and then we'll get the next 3 or 4 day push up to 12, just like we've seen like 5 or 6 times this year. So we had from back here, we had earnings pop off of $3, and then we had a little grind up to 450, consolidate sideways, spike up to 550, consolidate sideways, spike up to 7, consolidate sideways, spike to 8, consolidate sideways, and then we had a little failure, and then we kind of ground back up, set up under 7 again, pop up to 9, consolidate sideways, pop up to 1050. So now we move sideways and then hopefully pop to 12. So it's actually fairly predictable. You just have to be patient with it. So there's AMD. RMBS. Rhombus. Semiconductors. Okay. So semiconductors have been nice recently. The one thing I do not like about this is that it is up 1, 2, 3, 4, 5, 6 days in a row and right into this major weekly resistance at $14. So whenever you have a stock that's into major weekly resistance, it's most likely not going to go through it when the stock is up 7 days in a row or 6 days in a row. So what's going to happen is just like on AMD, where you get these pops where it goes from 7 to 950 or 7 to 9, and then it moves sideways for a couple of weeks. Then it goes from 9 to 1050, and then it'll move sideways for a couple of weeks. You get the same deal on something like Rhombus. It went from 1260 up to 1420, but it's right into that big resistance. So it's going to need to consolidate and set up a pattern, something like over here, where we had this run, consolidate sideways for like a month, and then a breakout. You'll catch it on this day. And that's how you make those quick short-term gains, as opposed to having to, buy this thing over here and then sit in it for a month just to wait for it to pop up, one day. And that's most likely what's going to happen over here. It'll probably test the breakout spot. It's probably going to try to go through it. It's probably going to fail. And then it will move sideways for a couple of weeks. And then hopefully it will attempt to break above it on a cleaner sort of lower risk setup. What I always look for on all the trading that I do are these coiled types of patterns where you have a real low risk spot where you have a relatively high probability of it breaking out because it's been consolidating for a while. It's been collecting people that are watching it. It's been a lot of eyes on it for a long time. It's got that momentum. It's got the catalyst because of earnings or some kind of news. And the biggest thing is that it's low risk, right? You can buy something like this at $14 and you put your stop loss at $13.80, and your potential for upside reward at that point, right, is you're risking 20 cents to potentially make $2 or $3 a share, which is like a 10-to-1 reward to risk ratio. So if you can get a 3-to-1 or 4-to-1 reward to risk ratio on average on every trade you make, you're going to make money trading even if you only have like a 30% win rate. So like you can suck at picking stocks but still make money because you have good reward to risk and good discipline. So that's one of the things that I always look for, and this thing just does not have it right now because it's up 6-7 days in a row and it's right into that big resistance. So I like the momentum. I like the pattern overall on like the weekly chart. It is into a big resistance spot here. So it has potential to make a really big move. But I mean, look at this level here. This is a big level. So it's got potential to, make a really big move, but it needs to set up because it's not going to break over, what is this, 5-year highs It's not going to break out of a 5-year trend after it's up 7 days in a row. It's just not going to happen. So there you go. There's Rhombus. Next up, PGNX. I really liked this one, actually, because similar to Rhombus, it had a nice, strong momentum run here. But notice that PGNX has now coiled into this flag, and it's closing right at the top of the flag. So it's giving you that indication that it's ready to break out. The only thing it really needs, I think, in my opinion right now, is just a little bit of volume. And it needs to come over this last high, which was 922. And you can see it was almost there on Friday at 919. And then, the next major resistance spot is going to be like the 960s and then 11 plus. So this has got a lot of potential to move. All it really needs to do is get over that 920 spot. And so what I'd be watching for now that it's kind of set up on the daily chart is I would watch for a tight pattern intraday where, even right now you could buy this thing at like 915, set your stop at 890 underneath that low right there, and your risk, 915 down to 985, give or take, would be 30 cents. You're risking 30 cents to, even if it only goes to 960, it's still 1-to-1. If it goes to $11, then you're at 4-to-1, 5-to-1. And so that's a really good high probability, low risk trade. So that's the type of trade that I look for. The only thing it needs is just a little bit of volume. If it could coil up even tighter within on the intraday chart or within like a 30-minute or a 60-minute time frame, so you could get it for like 10 or 15 cents of risk, then even better. So there is Progenics. Royal Caribbean Cruises. What's the float on this thing? This is a pretty big company. Not that bad. 167 million, 6.5% short interest. Okay, so not terrible. Again, though, and this is tough right now because every stock looks like this, right? It's not that you guys are picking bad stocks. It's just that literally every stock in the market looks like this. Like, everything is up. So it's a tough time to be longing right now. So you really got to be super picky and find the stuff like Progenics and stuff like Sempro, which is like coming off a bottom, MDCA, which is coming off a bottom into this gap up towards $8. So you got to be like real picky with this type of stuff. You're going to try to long something like INTX after it's gone from $2 to $4.25 in the last 6 days. You're just going to get smoked. So Royal Caribbean, similar type of situation. Nothing special in the momentum department. There's no excess volume really. It's just kind of breaking out because the market's breaking out. So as soon as the market starts to roll over, this one's going to go with it. So I wouldn't long this just because I expect that the market is going to be due for some sort of a little pullback here, or at least a sideways consolidation. We can't keep going up like this forever, right? Something's got to give. We got to pull back a little bit. Which is fine, right? That's normal and healthy for a bullish uptrend, but right now is not the time, in my opinion. And then last up, Duke Energy. Once again, up several days in a row. Nothing really spectacular in the volume or momentum department. It's just kind of trending. However, this one's almost even worse because it's right at the top of its channel here. Might have like a little bit more room to go if you want to like mess with the trend line a little bit and say that it could possibly go up to, damn it, hold on a second. Maybe it could go to 78. But is it really worth the risk, to just make $2 a share on a $76 stock? For me, it's not really worth it because it's going to take a lot of buying power up. It's probably going to be slow. It's going to be annoying to trade. If the market rolls over, this thing's going to go with it. Plus, this is an energy company, which means if energy weakens, then this thing is going to weaken and it's going to go with it. So there's just nothing spectacular about this stock. It's not a momentum stock. It's not the type of trade that I would make. Doesn't necessarily mean it's a bad trade. It's just that I am a short-term trader, and I tend to try to buy stuff that will move within like a couple of days, because that way I have very efficient use of my capital. So those are the top 10. Wonder how we're doing on time here. There's no way for me to tell like how long I've been talking. This recording thing doesn't have like a timer on it, so I think it's been like 20 minutes, so we might have time for a couple more. Oh, so I wanted to talk about a couple of ones that these other guys mentioned, just because they asked like more detailed questions. So AAON and NVLS. Let's take a look at those. And then also I'm kind of curious what SHLD is doing, just because that's a very high short interest, like squeezy kind of stock. So it can really go crazy when it gets moving. Doesn't look like anything right now. I've been watching this 1350 level for quite a long time. I had it back here at like 11. I had this breakout. It ran up to 1350, and then I was kind of waiting for it to hopefully break over the 200-day moving average. So that's the key right there on SHLD, is when this thing busts over the 200-day moving average and takes out that 1350 level, it's going to be very, very explosive in my opinion, because it has very high short interest, and there's going to be a lot of people trapped in it. So something to watch on that one. And then these other ones were AAON and NVLS. So let's start with NVLS. Looks like they had some kind of bad news. Nivalis Pharmaceutical Therapeutics. So it's a biotech company. Very low float, 13.87 million shares. What was the reason for this death blow over here? Probably bad clinical trial results. Failed trial prompts analyst downgrades. Okay. So cystic fibrosis drug study fails. What phase was it? Okay, so we know the drug doesn't work. Question is, what phase was it in? Phase 2 clinical trials. So this is sadly fairly common in the biotech area. Top line results from the company's phase 2 trial evaluating the efficacy and safety of 2 doses of Cavosenstat, whatever that is. Adult patients with cystic fibrosis, which had 2 copies of the F508DEL-CFTR mutation, which I have no idea what that is and don't care because I'm not a doctor. There were no dose-limiting toxicities, and it was well tolerated. However, it failed to demonstrate a benefit in absolute change, which was the primary endpoint. So basically, it was safe, it was well tolerated, everybody was okay on it, but it didn't really do what it was supposed to. So phase 2 trial, not sure what they're going to do at this point. Although we did not meet the primary endpoint, these data help inform the overall body of CF research. We remain dedicated to completing our current clinical CF research program. So not sure if that, I didn't listen to the conference call, not sure if that means they're going to continue with this drug or if they have other ones in the pipeline. But anyway, these biotech companies, it's always a risk. If you're long one of these biotech companies, it's always a risk that they're going to announce bad clinical trial results and the stock is just going to faceplant. However, it happened on Sempra. It happened on, MEIP. Happened on this one a long time ago. Yeah, back here. Big gap down in 2015. So this happens all the time. It's not really like a surprising thing. But I do actually like this setup because it seems like it's holding $2 very strongly. So the risk of additional news that's going to crush this thing from, say, $2 to 50 cents in my opinion, is pretty low right now. And I can say that even without knowing much about the company, because most of the time these things don't happen back to back, right? It's going to be a long-term type of trial that failed, and that's what kills it. And then they have to, it dances around sideways for 6 months before more news comes out. Sometimes if the company has multiple drugs, you'll see back-to-back fails if they're, finishing at the same time or whatever. But most of the time that doesn't happen. So I would, I guess, caution anyone who's thinking of trading this to make sure that they don't have any other clinical trial results coming up in the near future. And you can check on a site like biopharmcatalyst.com and just throw in like the ticker, Catalyst calendars. Here's the FDA calendar. And just throw in the ticker. And phase 2 data on the one that we just looked at, F508del mutation for cystic fibrosis, the N91115. That was due by the first quarter of 2017. It doesn't look like they have any others due in the near future. So I think you should be safe in terms of news. It's very low risk right now. I mean, the thing is $2.15 a share. You want to gamble on it, buy 1,000 shares at $2 or $2.15 and set your stop loss at $1.99. And a lot of times these things will rebound. I mean, there were a bunch of them recently that did this. I'm trying to think of one of the examples. Arwar at Arrowhead Research here, ARWR, is another one I've been sort of watching. After they face planted on bad results or bad news. But it's been holding this 130 level. So you can buy the thing and risk like 5 cents to potentially, if it takes off, make $2 or $3 a share. So the risk reward is really, really good as long as you check and make sure that they don't have any upcoming, PDUFAs or anything like that. So I actually kind of like this, and I'm going to keep it on watch, this NVLS. And it's also similar to sort of like what Sempra did. We had this big drop and then kind of goes sideways for several months, and then it starts to pick back up, and you'll see it develop like on the 60-minute chart. You'll see it develop into one of these coiled patterns where you have like a very clean level at $8, and then you have this little coil here. So this one is in my newsletter that I sent out. I mean, I guess technically it's like this. That'd be your risk versus reward on it. And the goal would be for this thing to bust over 8 and maybe run to $9.50 or $10 or something like that. But your risk on it is really low. So I like that type of pattern. MDCA, not a biotech, but a similar type of pattern. We have this big gap down, grind up, and then go sideways for like a month. And it's now tested the 685 here, tested it over here, 670, and I tested it again on Friday at 685. So now this is the fourth attempt at busting over that 685 level. So when it gets over that, it's got a big gap to fill up towards $8. So all of this big air pocket will probably fill in relatively quickly. So there's your short-term gain. So I do like that pattern overall. Okay, enough about NVLS. Last one here, AAON. So this person was asking about the fundamentals. First of all, I'm not a fundamental trader, so I'm not going to pretend I know what I'm talking about, but I can tell you what I do know. So let's look at some key statistics. So just at a very, very high level, profit margins are positive, operating margins positive, return on assets, return on equity is positive. We have revenues, we have quarterly earnings growth, we have cash on hand, and we have, looks like no debt. Not sure how accurate that is or if this is just outdated. Not very much short interest, so that's a good indication. Financials. Let's look at an actual balance sheet. So 14.5 million in cash, total assets of 257 million. And yeah, so I do have some accounts payable. You've got current liabilities, but I mean, the assets to liabilities ratio is relatively good. 250. It's 5-to-1 basically, right? Is your total assets to total liabilities. So that's good. Net tangible assets positive all the way. So this looks like a profitable company. I don't even know anything about this company, but it doesn't look bad. I can say that much. Cash flows relatively standard, it seems. Lots of outflows into the investing area. Positive operating cash flow is always a good sign. Income statement, net income is going to be positive and somewhat increasing. So it looks like there's a little bit of growth going on. So, I mean, on the surface, it looks good fundamentally. Then looking at the chart, also, what kind of company is this? General building materials. Okay. So this is actually probably a good, like, longer term grindy kind of move. Just because we're going to have lots of construction and stuff like that with the new Trump presidency. All of these construction companies like Caterpillar and Home Depot and Lowe's and those types of things are like, they're all taking off because of Trump for whatever reason. I don't know. Maybe they think Home Depot is going to sell a lot of stuff to build a wall across the border between the U.S. and Mexico. Who knows? But the point is, it's kind of a good sector right now. So general building materials, I like that. Pattern-wise, it's flagging, I guess. It looks good. I mean, right now the stop loss would be right here under like 32.25. And then breakout spot would be over 33.50. So anywhere in this area, the closer you can get it to this lower support line, the better. And then just make sure that you're not buying like right into earnings. Looks like earnings were out of the way on November 3rd. And it looks like that is what kicked this whole move off. November 3rd. So November 3rd after hours, I'm guessing. And then that set off this whole move. So this is actually technically an earnings run, which is an even better sign. So yeah, I do like this. It's not the type of stock that I would trade as a day trade just because it's not going to move quickly enough. But if you're like a longer term type of trader, or you're going to buy it and hold it for like a month or something, then this would be definitely a good one to do it on. So there you go, guys. There's a bunch from today. If I didn't get to yours, then just post it in the comments on the YouTube video, and I will get to it at some point this week and just do it via text. But thanks once again for watching. As always, like, comment, subscribe. I'll put my newsletter, blog, all that stuff in the description of the YouTube video, and you can sign up for that for free if you so desire. So thanks, and I'll see you next time.